So what would you say is the biggest mistake you see people make when they first get into property?
The biggest mistake we see is probably people not having a
What would you say is the difference between sort of a first-time investor and someone that's already kind of got a bit of a portfolio?
The biggest challenge for first-time investors, what we see a lot is
So with interest rates going up and down all the time, do you think that most people are using too much debt?
the first thing is probably understand the difference between good and bad debt.
Lovely. That's so nice.
Strike.
What's that thing over there?
That's the surf club.
Oh, is it? Wow, it's flash. So if somebody's sort of sitting at home on the couch watching this video, for instance, and they're sort of thinking about getting into their first property or property investment, how would they sort of go about that?
Yeah, I think the first step would be to, assess your current position, like where are you at, financially. You can do that through talking to a broker, and I think you got to ask yourself the questions, what do you want, what's your lifestyle want to be like in 10, 20, 30 years time?
Yeah.
Once you've got that mapped out, and then property becomes part of that broader strategy, well then, that's where we could talk to you about, how property might fit into the whole big picture. So at first, just, you got to get clear on why you're getting into it.
Yeah.
And once you've got that mapped out, then you can work out the best strategy for property and how that will work for your lifestyle. So
Cool. And so somebody could come to you without having the actual equity or money available for their first property, just to sort of talk to you and understand where they need to get to before they can jump on board?
Yeah, absolutely. I mean, for a lot of our clients, they own their own home, they've got a mortgage, they got kids, they got full-time jobs. For a lot of them, they are trying to access that equity and use it to leverage into another property. And that's just being smart with the resources you really have. Rather than having to save up large sums of money to put into another rental.
Yes.
So it's being smart with your money. So we can help with, working out how much equity you have in your property and, what your options are in terms of getting into a rental property.
Cool. He's just still on the green, eh? Yes! Hey. How do you guys sort of separate yourself and make sure you're working for the customer first?
Yeah, I think it's important to probably understand how our business model works. We're not real estate agents, so we have all these relationships with developers. But the key difference is that we buy the stock from the developer. So once it's gone through our process that we vet the stock and we buy that stock, that then becomes available for our clients to purchase. So you could say that we've got a vested interest in it.
Yes. Yes, baby. No! So with interest rates going up and down all the time, do you think that most people are using too much debt for their property portfolio?
Yeah, I guess the question about debt, I mean, the first thing is probably understand the difference between good and bad debt. So I think bad debt, if you're borrowing money to go on holidays and buy flash new cars and things like that, you'd be a little bit concerned about that debt. But, good debt, if you're using borrowed funds to buy income producing assets like property, well, then you've got an income that's generated and an asset that's going up in value. So, I think that's quite an important distinguishing point between with borrowed funds, and you can maximize the benefits of using the bank's money there to earn money long term.
Yep.
While also, mitigating interest rates going up and down.
So not necessarily, because it depends on the situation, right?
Yeah. I think the other thing to remember is the banks are always, before you get a loan, especially for an investment property, they're testing you at higher interest rates.
True.
So, that's already been thought out before you even get the loan. And I think if you've got a good broker on your team in your corner, then, you can structure and set up an investment property so it becomes a lot more affordable.
That makes sense.
It's a lot different to your own home, right? You borrow for your own home and you're the one covering all the
Paying it
interest costs, the principal,
Yes.
all the costs involved with the property.
Yep.
With a rental property, majority of those costs are covered by the tenant, servicing it. So, yes, very tidy.
Oh, is this in? Oh,
Oh, you're kidding me.
what would you say is the biggest misconception when it comes to property investment?
Yeah, I think for a lot of people, they think you have to be wealthy to invest, or you need a large sum of money to get started. But the reality is, most people realize they have equity in their home, and they have that ability to springboard into property. If you've talked to the right people and get the right advice, you'll realize you do actually have those options. I think other people think that it's overly complicated and you're going to be tied down with tenants and regulations and things like that. But for property investment, it's just, once you understand it and you learn it, it becomes, it's a lot simpler than you actually think. And that's what we try to bring to the table for people is offer that experience and guidance so, they can avoid costly mistakes that would generally come up if you're doing it for the first time.
Yep.
Yeah.
Fantastic. It's good to know that. I know a lot of people would probably be a little bit nervous about those things that you're saying. So
Yeah.
having that comfort from what you were explaining is definitely going to help them get that first, take that first step.
Yeah. Oh, yuck.
Yeah. Okay.
Oh, we might.
Thanks, mate.
Thanks, bro.
Appreciate that.
It was
It was
an awesome day.